Okay, good morning everyone. I hope things are well. I'm going to make this video publicly viewable. So hello to the many people that have been following me for 5, 6, or maybe our 6th or 7th year by now. Hope things are well, and probably a good number of new people as well. I'm really going to be going through this video pretty quickly. There's a lot that's going to cover. This unbelievably ugly chart is what I'm going to attempt to go through very quickly. So hey, this is a video, you can pause it, rewind it, that kind of thing. And there are other videos on this site, so you know what, if this gets a bit confusing, look at the other ones. They're short, sweet, concise, right to the point. But let's see, this is a video all about Greedometer 8, 9, and the ugliest one of all, Greedometer 10 sequence, and leading us to the birth point of Greedometer 11, which is the sequence we're in now. This is going to scare you, so don't worry about this for now. We'll be spending a lot of time on it, but let's first I want to talk about this. There's another video on the site that has this. This is the crash of 2007, 8, 9, right? And what I want to show you briefly, again, you can pause it, rewind, whatever, and there's another video to watch, but look, here's what I want you to take away. During the course of this collapse, there was basically nothing new from any major central bank. I mean, we knew that we were in a regime of lowering interest rates on a fairly steadily and predictable pace. We went through the Bear Stearns blowing up and other things like that. But look how solid this thing is. Look how predictable it is here. Baseline established, top line established, even through the Bear Stearns blowing up, which is like, yeah, no one saw that coming. Right, okay. Right up until we get to here, which is the sky's falling and everyone's getting bailed out. Well, what's that doing? It's that then warped the baseline, okay, flatter from here to here. This is my estimate. We can't really prove it, but we know it was somewhere right around. I can know from experience after seeing 10 of these sequences, it was something like that. Anyway, look at the other video to crawl through this. The reason I'm bringing this up is the lesson that you learn is if central banks just sort of stick with a known thing, that gets baked in by these algorithms, and then you move through the sequence unmolested is what I would call it. Okay, now the chart we're about to see is has a great deal of central bank molestation, and for good reason, right? As you'll see, whenever they don't, things melt down. All right. I'm going to make use of one more chart. Those of you that have been following me for years know this chart well. This is the time between the Greedometer sequences, right? So central bank takes an action, stops a crash, right? The 2003 crash, and you have to wait this many weeks, right? Until we get the initiation or the warm up for the crash of 2007, 8, 9. We have to wait this many weeks until there's that crash of 2007, 8, 9 gets truncated by central bank goodies. So we wait this many weeks until the flash crash begins getting the warning before the flash crash. And we have to wait, and then it gets killed, of course. Then we have to wait this by central banks. Then we have to wait this many weeks before we see the warm up to the 2011 crash initiation. Okay, so that's how, and then it's onward and onward we go. Now when we look at this chart, let's put this one away. When we look at this chart, you're going to say, one of you or some of you are going to say, well, how do you know that that's the birth point? Well, there's a certain signature when you've seen this so many times, and when you follow this is your bus schedule, right? It tells you when the next bus is going to come along. Now, those of you that again have been following this for a while know, well, this is sort of a scary chart, isn't it? It's basically, here's what this chart says in a nutshell, right? There's a crash, central banks take actions to stop it, and they don't solve it. They buy less and less time, less and less holiday each time until we finally reach the point where there's now 0 weeks between the sequences. So central bank takes an action, finally stops a meltdown, and initiates immediately with a 0 week lag another initiation of a meltdown. Okay, here we go. Ready? So we know this is the birth point of Greedometer 8 sequence because of, well, I just showed you, and some other characteristics that, well, I don't want to go into. Anyway, obviously, this is the initiation point. This is the first baseline point. This is the first top line point. Look at how well respected the mini Greedometer sequence is and how it's showing the major inflection points in the SPICs. Clearly here, clearly here. And then we were about to see another drop here to this baseline point. We can't have that. Things were getting a little bit too scary. So the Bundesbank chimed in here, and which was epic. And from a U.S. or North American perspective, we're like, what? Why does that matter? Look, it matters. There's more to solving this riddle than just the Fed. Okay. At this particular instance, in late March 2017, you might say, hey, the Fed's not doing anything. Well, it's still maintaining its balance sheet and stopping it from contracting. Okay, there's some amount of sugar yumminess. However, the other major central banks are currently generating about $200 billion US in terms of monthly new liquidity. So yeah, there's still things pumping, but I digress. Back to this, and again, you can pause and rewind and that sort of thing. This baseline point was prevented by the Bundesbank saying, we're going to let the ECB do QE. But you know what? Because we're German, we want some responsibility. Good for them. We want them to do everything else first. And if that doesn't solve it, okay, then do QE. And what do you know? We had the ECB piling on saying, yes, we're going to do everything and all that kind of thing. So yeah, we don't see the baseline. This is a warping. We go back up to the top line, we blow out and set a little bit of a new top line, because after all, this is a lot of yumminess. We spend 2 or 3 weeks there till finally there's a 1 week move away or truncation. And how do we know there's 1 week? Because, well, this thing told us there'd be 1 week. Okay. Back to this. So we start the sequence 9. Look at that. Beautifully respected. Top line, baseline, top line. Baseline again. The central banks let us see the baseline again. Imagine that. Without warping things. To get the ending of QE3, we go right back to the top line. And at this point in time, I remember it very well. I do a live gig at the NASDAQ Market Center in New York City, saying we're within 1 week and 1% of the SPICs rolling over and initiating a larger drop. And the next morning, we have an announcement from the BOJ saying we're going to put a larger turbocharger on our printing press and do even more. Welcome to my world. Which is why I have that sort of situation is why I've been doing less and less, saying, hey, the sky's going to fall, because we know what happens. Typically within 24 or 48 hours, one of the main central banks says, here's some more candy. But what that did was warp. Here we go. Was warp. So this is key. I've covered this in other videos, right? So forgive me, you folks that have been following this for years. If a non-Fed central bank takes an action, what does it do? It doesn't change the overall pace of collapse, which is shown by the baseline. It keeps that, but it warps. So it kicks up and over from here to here, sets a new top line, right? That's what it does until there's enough that it just breaks, it truncates the sequence and grows another one. And we look back to see when's the next buzz coming. There we go. So that's what happened. That's what the BOJ did there. I should have labeled that here. But anyway, get a slightly steeper top line again for Greedometer 9 sequence till finally we get that birth. Why? Because the ECB announced QE. And that's massive. That's a game changer. When you get a big enough impulse response, a big enough central bank sugar bomb, you truncate the sequence. We don't go, otherwise we would have been screaming back down again, right? We basically truncate the sequence, and there is a 0 week. This is actually between 0 and 1 week. We can only measure to a granularity of 1. So there's a 0 week lag before the next sequence starts. And I put a dotted line in here about what I suspect the initial baseline would be and what the mini Greedometer weekly readings would have been without more central bank sugar bombs. But we did every second week or so, right? Early in 2015, all throughout the first quarter into the second quarter. Look at all this. Look at all this. The PBOC, the ECB, BOJ. Every second week, there's some kind of new trick. Desperate. Just look at this. Okay, spend some minutes reading all this stuff, threatening to put people in jail. You name it. Now that crash, you will remember. Some of you will remember a pretty violent crash in August 2015. Okay. Well, what was happening is you had all these central bank sugar bombs warping new top lines again and again and again till finally we got the mini Greedometer reads rolling over, getting nice and low. And you know what? At this point in time, things are about to melt down pretty sizably. And at that point, right, that week, one of these 2 weeks, I did a blog posting, and you can go find it, right? Just take a look at early to mid-August 2015. I did a blog posting saying, heads up, folks, things are going to get really crappy for the next 2 weeks. And, well, they were, right? They fell off a cliff. Of course, at the time, it was blamed on the Bank of China devaluing its currency. So what does that tell you? There's always going to be a scapegoat. Okay, there has to be some rationale, some means, some reason for people to say, well, that's why things dropped then. There always is going to be one. Trust me. Okay, and there was last time. It was, hey, Bank of Japan, Bank of China, I should say, devaluing their currency. Well, if that's so unpredictable, then how come these algorithms? I'm only showing you the mini greedometer. The greedometer is doing something similar. But between them, I had a very high confidence, which is why I did that blog posting there. Also, why I was able to say right here at the NASDAQ Market Center interview, hey, things are going to melt down. I should have said, and I think I may have said, unless there's some more new central bank candy. Anyway, people tend to forget that. So things melted down, and we would have seen this baseline here. We were prevented from seeing it. We had what I call release the Dudley. And if you go back to that point in time, you will see blog posting showing by the minute, a crash being stopped as soon as Dudley started speaking, saying, probably not going to raise rates next at the next FOMC meeting. And there you go. Okay, that it stopped us from seeing the baseline. The crash would have continued 20-25% within the next to a 20-25% drop, right, within the next week. I'm estimating. We can't have that. That's too scary. That much reality is too scary. So that's why Dudley did that. So slightly steeper top line, Dudley, it does that. So we get some sort of baking that in over a few weeks, and we get something new happening. Okay. This is this symbol here. This little purple symbol is where something new that's been happening since then, which is someone will kick the power cable out of the wall for the futures market, the NYSE, the NASDAQ, or even a major futures market or stock market in Europe. Some major market participant will lose communications overnight or for a few minutes or something like that, right? And stop the market from melting down. These are instances all along here. Most famously here when Trump was elected. I'll get to that. What do we see? We see no rate hike. So, hey, yumminess is back. So we get a new top line. We get all these guys happening up here, right? More threats, another top line. We get another meltdown initiated. And of course, more stopping forces here from the BOJ, Dudley, Bullard, all these sorts of goodies, stopping the baseline from seeing. I warped the baseline from here to here. Why? Because of mostly from Dudley and Bullard. Okay, Dudley and Bullard are Fed participants. If the Fed says or does something significant, it will warp the baseline. Now, as you have seen on another video on this website, when the Fed threatened to taper QE, it steepened the baseline, and then a few weeks later said, just kidding. It flattened it again. You can see that in a different video, but for educational purposes, let's just stick with this. This was my assumed and probably pretty close first baseline. It got warped flatter by Dudley and Bullard, and top line's getting continually pushed out. And over the course of all of this, it's laughable, baseline gets warped to somewhere in here, okay? Finally, for Greedometer 10, the baseline gets warped out there. Look at that. As a reference point, I put the baseline for 2007-8-9 on here. Again, as a reference point, I think we were approaching the slowness, I said that right, the slowness of the crash of 2007-8-9. We were approaching that by virtue of the baseline getting warped about that flatter. More top lines getting generated, and hey, breaking the stock market because that's inconvenient. Fed threatening, breaking the stock market. More goodies. You guys can read all this. This is way too much. This video will get too long. Until we finally come to the end, and which is the birth of G11. Now, I've repeatedly for years demonstrated how a central bank, not just the Fed, but the Fed, the ECB, the PBOC, the BOJ, and to a limited extent the Bank of England, can impact the course global liquidity and how that gets sloshed around in dark pools and other places, impacting asset prices, not least the SPICs. But monetary policy and threats of monetary policy have a measurable, as is seen by this algorithm and time series of this algorithm's reading, has an absolute effect on this and on asset prices, namely the SPICs. But as powerful as monetary policy is, it comes second place, believe it or not, to fiscal policy goodies. Fiscal policy goodies are immensely powerful. So when what happened here was when it broke the stock market, on the evening of Trump's election win. That's not shown in this chart, right? You just see things get happy, and of course they continue to get happy after that for another 2 or 3 months, leading us to where we are now. The evening, and some of you will be aware of this, the futures market threw up violently for about 2 hours as soon as the Trump win was known, November 8th, 2016. And let's see, SPIX and Dow futures were down 6% or so in about 2 hours until safeguard mechanisms cut in and shut the futures market off. Now, they only had to do it for a few minutes. Now, you might say, look, I'm not wearing a tinfoil hat. This policy was set in place after the unbelievable and epic crash of October 2007, where the Dow and the SPIX dropped about 20% in about 2 or 3 days, something like that. So to prevent that sort of inconvenient reality from happening again, policies were put in place to stop the stock market, to throttle it and stop it. So it has been used very rarely. It was used that night. So as I say, the SPIX and the Dow futures were down about 6% in 2 hours, so they stopped that from happening. And then if you stop a crash and you let it get quiet, well, there's many billions of dollars at the ready from central banks to begin to spike all sorts of things. It could be dollar yen, could be pummeling the yield on the 10 or the 30-year T-note or T-bill or bond. It could be SPIX futures, could be the VIX, any number of things to sort of force an apparently happy-looking picture. And they did. Now, you only have to do that for a few minutes. If you do it for a few minutes violently, some momentum algos will sniff that out. They'll pile on board, give you a few hours. Other Momo algos will sniff that out, and they'll pile on board for a few days. And onwards we go. And I give you the unbelievable, the 20% rise from where it was basically overnight when Trump was elected. SPIX was at 2,000, or pretty damn near, to 2,400, right? About a month or so ago in February. And anyway, that's the story. I gotta stop this because it's becoming probably a pretty long chart. But there's a lot to see here. Pause it, rewind it, read all these things. This is how it works. We are now in Greedometer 11, and there was a 0-week lag, of course, because there was 0 here, and there was 1 there, and there was, I think about 3 here, and following that chart, right? So is this crash going to be stoppable, Greedometer 11? Well, I don't know. Probably not. The last crash, obviously all the previous sequences were stopped, and there have been 10 previous since the beginning of my data in 1999. They've all been stopped by central bank mostly, and to a limited extent fiscal policy goodies. So maybe this one's stoppable. Okay, well, what's quote unquote different this time? Well, what's different this time is central banks, their credibility is decidedly less. They're not rock stars anymore because these crashes keep initiating and happening, and why is that? And they're running out of policy bullets. And so a big part of the reason that the great unwashed are sold or told on this fantastic Trump rally is, hey, we're going to get this fantastic economy and tax cuts. Really? First of all, we're going to get unfunded tax cuts, right? What does that do? That's just going to add to the debt. And don't think for a second that you can grow your way out of that much of a debt load. Okay, I don't think in the last 2 centuries of sovereigns and debt loads that I've studied, I don't think I've ever seen. I can think of one sovereign that managed to grow its way out of this much debt to GDP. But hey, buy that if you want to. Anyway, we are going to get some form of unfunded tax cut policy, because that's the play that Republicans do all the time. And I'm not just beating up on Republicans. If we had more time, I'd beat up on Democratic fiscal policy. But there's enough blame to go around to look at how we got here over the last 20 or 30 years in terms of debt. So anyway, let me wrap this up. I don't want to piss everyone off, red and blue, but let's be honest. Okay. So on with the show. We are now in Greedometer 11. I don't think it's stoppable, but the only thing I can think of that could stop Greedometer sequence 11 would be probably a coordinated helicopter drop of free money to everyone all over the place. And of course that would unleash a tidal wave of inflation that would demolish the bottom 50 to 60% in the US, North America, let's say, in Europe, and the bottom 90% of developing markets. I hope that does not happen. We'll see. On with the show.